Very good morning to all of you, my friends. I hope you guys are doing good. Further, I hope you guys have solved all the questions of contract costing. Now, today, we are starting with a new chapter that is process costing. When talking about the weightage of this chapter, the weightage we can say it's approx 8 to 12 marks, and examiner do ask questions on this chapter quite frequently. So let's start, guys, with the new chapter that is process costing. So now, what is process costing? This method of costing is used by those manufacturing concerns wherein the raw material has to pass through two or more than two processes before being converted into final product. I repeat again, what is process costing? This method of costing is used by those manufacturing concerned wherein the raw material or input has to pass through two or more than two processes before being converted into final product. So what is process costing? It's a method of costing used by those enterprises wherein the raw material or input has to pass through two or more than two processes before it's a method of costing used by those enterprises wherein the raw material has to pass through two or more than two processes before being converted into final product. How this mechanism works, let's say my input or raw material is transferred to process first. Once process first is over, the output of process first is to be transferred to process two. Assuming it is the final process, and the output of the process two will be my finished food. So guys, this method of costing is used by those companies wherein the raw material or input has to pass through two or more than two processes before being converted into final product. So here in this example, my input or raw material is transferred to process first. After completion of process first, the output of process first is transferred to process second. And once the process second is over, it is transferred to finished goods. So this is what process costing is. I request you guys to please copy this part. If you guys have any doubts, you guys can please post your query. In the meanwhile, Shivani, good morning. Alok, good morning. Manisha, good morning. Vinodini, good morning. Dhyanesh, Shankaran, good morning. I request you guys to please copy this part. Very good morning, Mr. Reddy. Very good morning, Khushi. So now, let me discuss this point with the help of a practical example, wherein let's say I'm the manufacturer of potato chips. My final product is potato chips. What's my final product? And my raw material is what? Very simple. Potatoes. I'm the manufacturer of potato chips. I do procure these potatoes directly from the farmer. Now, let's say there are various processes involved in manufacturing potato chips from potato. Let's say my first process is as and when I receive my raw material, this is my input or my raw material. So this is my input or raw material. Let's say my first process is sorting and grading. Because I receive potatoes in bulk quantity, so I have to sort out and grade the quality of potatoes I have to use. So let's say my first process is sorting and grading of potatoes. This is my first process. So my input or raw material is transferred to my first process, that is sorting and grading of potatoes. After this process is over, the output of this process is, let's say, transferred to the next process, wherein I do manufacture potato chips from potato. So the second process is manufacturing potato chips from potato. So the second process is manufacturing potato chips from potatoes. Once this process is over, let's say the output of this process is transferred to the next process, wherein I do add flavors and preservatives. So let's say my process third is adding flavor and preservatives. So the output of process second, that is potato chips, are transferred to the next process, wherein we do add flavors and preservative. And once this process is over, that is my potato chips are ready, it is transferred to the next process, that is, let's say, packing and finishing division. Packing and finishing division or packing and finishing process. This is, let's say, my process number 4. And the output of process 4 is my final product, that is my potato chips. This is my final output. Final. So in this industry, we can say that various processes are involved. So that's why this industry will use process costing. I repeat again, in this industry, there are various processes involved before this final product is manufactured. So herein we can say that in this industry, we will use process costing. So the first process starts right from sorting and grading. Once the sorting and grading of potatoes are done, the output is transferred to the next process, wherein the potato chips are manufactured from potatoes. Once the output of process second is ready, it is transferred to the next process, that is process third, wherein we do add flavors and preservatives in the potato chips. Once the flavors and preservatives are added, my output is ready and it is transferred to the next process, that is process number 4, wherein we do pack and finish these potato chips in various packets. And this is how we get the final product, that is my potato chips. So now, herein what we can see is that there are various processes involved in this industry. And since each and every process is unique, separate costs are incurred for every process. Therefore, separate process account is to be prepared for every process to record the costs that are pertaining to the process. So, herein I can say, since each process is unique and separate, therefore, separate process account is to be prepared since each process is unique and separate. Therefore, separate process account is to be prepared for every process to record the cost pertaining to process. I repeat again, हर एक प्रोसेस यूनिक है और सेपरेट है, हर प्रोसेस में सेपरेट कॉस्ट इनकर होती है. So therefore, for every process, that is process first, process second, process third, and process fourth, for every process we need to prepare separate process account to record the cost that are pertaining to the process. If you guys have any doubts, you guys can please post your queries. And further, I request you guys to please copy this part. I'll be covering this part, Dhyanesh, don't worry. I request you guys to please copy this part. If you guys have any doubts, queries, you guys can please post your queries. For the students who have joined a bit late, we have started with process costing. This method of costing is used by those companies wherein the raw material has to pass through two or more than two processes before being converted into final product. Since each and every process is unique and separate, therefore a separate process account is to be prepared for every process to record the expenses pertaining to a process. Now, the point is how to prepare process account. What is the pro forma of process account? How to record the expenses that are related to the process. So we do prepare process account to record all the expenses pertaining to a process. When talking about the pro forma of process account, this is how process account is prepared, wherein units, amount, units, and amount. So, yes, Dhyanesh, very true. The calculation, the cost of each process and calculation of total cost of the product is the purpose of this chapter. So, we have to transfer input or raw material to process first. So, to input or material, further, whatever the expenses that are incurred in the process will be recorded. That is, if any labor cost, if any indirect expenses, if any direct expenses, all will be recorded in this process account. I'm just discussing the basic pro forma. So after incurring all these costs, we'll be getting the output and it is transferred to the next process, that is process second. Guys, I'm discussing the basic pro forma. I'm ignoring abnormal loss, normal loss, abnormal gain. So herein I'm discussing the basic pro forma, wherein whatever the cost that is incurred will be recorded in the debit side and the output that is transferred to the next process will be recorded in the credit side. So this is how the basic process account is prepared. We can prepare process second account also. Similarly, wherein the output of process second will be the input of, the output of process first will be the input of process second. So we'll first write process first, that is the input. And further, whatever the costs that are incurred in the process will be recorded. And the output of process second, let's say there is no process third. Assuming there is no process third, the output of the process second is transferred to finished goods. So this is how the basic process accounts are prepared. I'm ignoring the normal loss, and abnormal gain part. I'll be discussing these parts separately. So when talking about the basic pro forma of process account to input, that is the material, that is the or input or raw material is transferred to the process first, plus all the costs that are incurred in the process first. On the credit side, we'll write the output of the process first, that is to be transferred to process second. When talking about preparation of process second account, the first point will be the input that is received from process first. Further, whatever the expenses that are incurred in process second will be recorded. Assuming there is no process third, so the output of process second is to be transferred to finished goods. So this is how the basic process account is prepared. I request you guys to please copy this statement. Further, I have provided this format in the PPT also. So I'll be sharing the, I'll request you guys to please download the material what I have provided. For your reference, I'm sharing the screen also for a quick review. Ashok sir, I'll be sharing some notes. So please आप उसको zoom कर दीजिएगा. अशोक सर. So herein, process costing is a method of costing used. One second, guys. So the first slide, that is what is process costing? Process costing is a method of costing used in industries wherein the material has to pass through two or more than two processes before being converted into final product. A separate process account is to be prepared for each process, and all the expenditure pertaining to a process is charged to that process account. So this is how the mechanism works, wherein the input or raw material is transferred to process first. The output of the process first is transferred to process second, and assuming there is no process third, so the output of process second is transferred to finished goods. This is the basic pro forma of process account, wherein two material input, two labor, two other expenses, and by process second. Normal loss, abnormal gain. I'll be discussing this part separately. So this is the basic pro forma of process account. So if you guys have any queries in this part, you guys can please post your queries. Then I'll be starting with a very basic question, how to prepare process account. Good morning, Kavita. Jyoti, Shivani, Manisha, Sankaran, any doubts? Kushi? Yes, Manisha. The balancing amount is transferred to the next process. So for further clarity, let me discuss one basic question, that is example number one, basic example. I request you guys to please download the material what I have provided. Further, the similar question is there in the study material also. So those who have not downloaded, please downloaded the material. Please open the study material. I'm discussing example number one, basic of the material what I have provided. So let's start, guys, with example number one. From the following data, prepare process account indicating the cost of each process and the total cost. The total unit that pass through each process are 240 for the period. Further, the details are given, that is material, labor, and other expenses of process first and process second and process third. Indirect expenses amounting to rupees 85,000 may be apportioned on the basis of wages. There is further no opening and closing stock. So we have to calculate the cost per unit of each process and the total cost of the process. So let's start, guys. Since herein in this question, there is no information given as regards normal loss, or abnormal gain. So herein, this is how we'll prepare the process account, that is question. Herein, since we have to calculate the per unit price, so that's why the first column will be per unit and second column will be the total amount. So the input is of 240 units, and let's say assume that the material cost is 1,50,000. So to material input is my 240 units and output is also 240. So to material cost is 1,50,000. To labor cost is how much? It is 80,000. Two other expenses are 26,000. Since we have to calculate the per unit cost also, so 1,50,000 divided by 240, this will be 625. 80,000 divided by 240. So this will be 333.33. 26,000 divided by 240. This will be 108.33. Further, it is given in the question that indirect expenses amounting to rupees 85,000 can be apportioned on the basis of direct wages. So my indirect expenses are 85,000 and it can be apportioned in the ratio of direct wages. My direct wages are 80,000, 2 lakh and 60,000. So 8:20:6 will be the ratio. That is 8:20:6 will be the ratio. This will be 20,000. This will be 50,000. This will be 15,000. So indirect expenses in process first account will be 20,000. So 20,000 divided by 240, this will be 83.3. So we have recorded all the costs that are incurred in process first account, and the output of process first will be transferred to the next process, that is process second. The total cost that is incurred is 1,50,000 plus 80 plus 26 plus 20. So the total cost will be 150 plus 80 plus 26 plus 20. 2,76,000. The output of process first is transferred to the next process, and the total cost of these 240 units in process first will be how much? 2,76,000 divided by 240. So the per unit cost is 1,150. So this is how a process first account is to be prepared. If you guys have any queries in this part, you guys can please post your queries. Now process first account is over. Now we'll prepare process second account. Now the output of process first is transferred to the next process, that is process second. So we'll write to process first, and that is 1150 and 2,76,000. So the first point what we will write in the second process, that is process second, will be what the input that is received from process first. Thereafter we will write material, if any additional material cost is incurred, labor, other expenses. So my material cost is 50,000. My labor cost is 2 lakh. And other expenses are 72,000. Further indirect expenses as calculated are 50,000. Now let's calculate the per unit cost. So 50,000 divided by 240. The output of process second is transferred to the next process, that is process third. So the total is 2,76,000 plus 50,000 plus 2 lakh plus 72,000 plus 50,000. So this will be 6,48,000. So the total cost per unit till date is 2,700. So this is how process second account is prepared. Now the output of process second is transferred to the next process, that is process third. Herein again, the output of process second is transferred to process third. So in process third, we will write the first point. Whatever the first point, what we'll be writing in process third will be what? The input that is received from process second. That is 2,700 rupees is the per unit cost, and the cost that is incurred till date is 6,40,000. Now we'll record all the expenses that are incurred in process third. That is to material, to labor to indirect expenses. Material cost is 20,000. Labor cost is 60,000. And other expenses are 25,000. Sorry. Further indirect expenses are 15,000. We'll calculate the per unit cost also. So 20,000 divided by 240 will get 83.33. 60,000 divided by 240 will get 250. Now this is the last process. Therefore, output of process method is to be transferred to finished goods account. So buy finished goods. So 6,48,000 plus 20,000 plus 60,000 plus 25,000 plus 15,000. So the total cost of these 240 units is 7,68,000 and the per unit cost is 3,200. So this is how the process accounts are prepared. If you guys have any queries, this is a very basic question. The purpose of this process, the purpose of this question is to explain you how this mechanism works. What is the logic behind how to prepare the basic process account? So if you guys have any queries in this part, you guys can please post your queries. Bala, Vinodini, I'll be discussing joint and byproduct also. So don't be worried here. In the next chapter, we'll be discussing joint and byproduct. Good morning, Aslam. Very good. Those who want to copy this explanation can please copy. Waiting for your queries, guys. Just give me a minute, guys. Just give me a minute. So, guys, let's proceed further with the next part, that is normal loss. We have already completed that how to prepare the basic process account. Now we will be discussing few more points, and thereafter we'll discuss the full-fledged question on process account. So let me discuss few more points. Now the first point, normal loss. Now what is normal loss? Due to the nature of the production process or a product, this loss, the loss that is bound to incur, is normal loss. I repeat again, due to the nature of the production process or a product, the loss that is bound to incur is normal loss. When talking about normal loss, this loss is unavoidable. We can't avoid a normal loss. This loss is bound to happen. However, the loss can be predicted by the management well in advance. So what is normal loss? Due to the nature of product or production process, the loss that is bound to incur is normal. So in short, we can say this normal loss is what? Unavoidable. Or we can say it is inherent in nature. This normal loss, depending upon the past experience and past data, can be expected, can be estimated well in advance. So can be estimated in advance. Let me give you a few examples of normal loss. Let's say I'm the manufacturer of potato chips from potatoes. I procure these potatoes directly from the farmers. So from the farm till my factory gate, several times loading, unloading is done. And during the course of loading, unloading, or transit, certain percentage of potatoes are bound to damage. कुछ percentage of potatoes damage होंगे ही. It is the nature of the product. So that is what we call as normal loss. Another example, let's say I'm the manufacturer of wooden furniture. During the course of manufacture of wooden furniture, कुछ percent जो wood का है वो scrap होता ही है. It is of no use. That is what we call as normal loss. Another example, let's say I'm into business of processing crude oil. I convert this crude oil into petrol, diesel, gasoline, kerosene. During the process, certain percentage of oil is evaporated. I can't avoid it. So this is what we call as normal. Another example, let's say I'm the manufacturer of I'm the manufacturer of crockery. Now, during the course of manufacture, certain percentage of crockery will be damaged because it is the nature of the product. Product का nature ही ऐसा है कि during the manufacture, certain percentage crockery damage होती है, चाहे loading के time हो, चाहे unloading के time हो. That is what we call as normal loss. So, what is normal loss? Due to the nature of the product or production process, this loss is bound to incur. This loss is bound to happen. That is normal loss. So we can say this normal loss is unavoidable. We can't avoid a normal loss. So the normal loss is inherent in nature, can be estimated well in advance. No worries, Aslam. So I hope this part is clear. What is normal loss? Now the next is, what is the treatment of normal loss in process account? When talking about the treatment of normal loss, the value of normal loss will be absorbed by good units. I repeat again, what is the treatment of normal loss? The cost or value of normal loss, the value or cost of normal loss, value, or we can say cost of normal loss, will be absorbed by good units. The cost of normal loss will be absorbed by good units. Further, if any scrap value is realized on sale of these the normal loss, then whatever the scrap value that is realized will be deducted from the total cost. So if any scrap value is realized on sale of scrap, then it will be deducted from the total cost of product or process. So what is normal loss, guys? Inherent in nature, bound to incur. We can't avoid a normal loss. Can be predicted well in advance. When talking about the treatment of normal loss, the cost of normal loss will be absorbed by good units. Further, if any scrap value is realized on sale of scrap, then it will be reduced or it will be deducted from the total cost of the product or process, whatever it is. I request you guys to please copy this part. When talking about this language, I'll be discussing this part with the help of example also. So don't worry, guys. Further, first copy this part and then we'll discuss what is the concept, how this cost of normal loss is absorbed by good units. So please copy this part first. Now, when talking about the treatment of normal loss, let's say I have made an input of 10,000 units, and further my total cost is, let's say, rupees 1,80,000. I have made an input of 10,000 units, and let's say the cost of my process is rupees 1,80,000. So, how much will be my cost per unit? Very simple. How much will be my cost per unit if no normal loss? 1,80,000 divided by 10,000. So rupees 18 per unit will be my cost per unit. Yes, Dhyanesh. So my cost per unit will be rupees 80. I repeat again, guys, my total cost of the process is 1,80,000, and I have manufactured, I have made an input of 10,000 units, and my output is also 10,000 units. So my cost per unit of the output will be how much? Rupees 18 per unit. Now let's say it is given in the question that normal loss that is bound to incur is at the rate of 10% of input. The loss that is bound to incur is what? 10% of the input. So my normal loss will be how much? 1,000 units will be my normal loss. And my output will be how much? 9,000 units. My output will be 9,000 units. So in that case, when there is normal loss, in that case, this 1,80,000 cost will be absorbed by 9,000 units. And the cost per unit will go up by rupees 2, and the total cost will be rupees 20 per unit. So herein, this cost of 1,80,000, which was supposed to be absorbed by 10,000 units, will now be absorbed by these 9,000 units only. The loss of these 1,000 units will be compensated by remaining 9,000 units. I repeat again, the loss of these 1,000 units will be compensated by remaining 9,000 units. So I repeat again, the cost of this 1,80,000 that was supposed to be absorbed by 10,000 units will now be absorbed by 9,000 units. The loss of these 1,000 units will be compensated by this remaining 9,000 units. That is my finished goods. If you guys have any queries, you guys can please post your queries in this part. So herein we can say that पहले जो 1,80,000 खर्चा 10,000 units पे हो रहा था, due to normal loss, this 1,80,000 cost belongs to 9,000 units. So हमारा cost per unit जो है वो बढ़ जाएगा because of normal loss. If you guys have any doubts in this part, you guys can please post your queries. So normal loss, what is normal loss? That is inherent in nature. Due to the nature of the production process or product, the loss is bound to incur. We can't avoid it. It can be estimated well in advance because past में भी ऐसा हुआ होगा. That's why management can predict that 4% or 5% will be my normal loss because of the nature of the product or production process. Now let's say I'm the manufacturer of potato chips from potatoes. And I have assumed that 10% potatoes will be damaged during the transit or loading and unloading. And these damaged potatoes can be sold in the market at a nominal price of, let's say, rupees 2 per kg. So herein we can say some scrap value is realized on sale of these normal loss units. So what if in case, if some scrap value is realized on sale of scrap? So let's assume, let's take one more situation. If scrap units can be sold in market at the rate rupees 2 per unit. Then what? How much will be the cost per unit? Very simple. How much cost we have incurred for manufacturing the units? 1,80,000. How much recovery we are making? See, there is a normal loss of how many units? 1,000 units. And these 1,000 units can be sold in the market, let's say at the rate rupees 2 per unit. Or let's say it is at the rate 4.5 per unit. Let's assume it can be sold in the market at the rate 4.5 per unit. So we will be making a recovery of how much? 1,000 units into 4.5. That is 4,500 we are making the recovery out of 1,80,000. Divided by how many units? 10,000 units minus 1,000 units. As I said that the normal loss, the cost of the normal loss will be absorbed by good units. So in short, हमारा खर्चा कितना हो रहा है? 1,80,000. How much we are recovering? 4,500. So my total cost now will be 1,75,500 for the remaining 9,000 units. So the cost per unit will be how much? 19.5 per unit. So what I want to say is, if there is a normal loss in units, then it will be compensated by good units. If any scrap value is realized on the sale of normal loss units, then whatever the scrap value realized will be reduced from the total cost. This is how the cost per unit will be calculated. So when talking about the calculation of cost per unit, very simple. Total cost minus scrap value realized divided by inputs minus normal. This is, we can say, this is how the cost per unit will be calculated in every case in process account. So the points, let's sum up what we have discussed. Normal loss, it is inherent in nature, bound to incur, cannot be avoided. It is unavoidable. It can be predicted well in advance by the management. When talking about the treatment of normal loss, very simple. The normal loss, the cost of the normal loss will be absorbed by good units. इसका मतलब क्या होगा कि हमारा जो normal loss की वजह से हमारा cost जो है वो बढ़ जाएगा. The cost which was supposed to be absorbed by 10,000 units will now be absorbed by 9,000 units. The loss of these 1,000 units will be compensated by the remaining 9,000 units. Further, if any scrap value is realized on sale of scrap, then whatever the amount that is realized will be reduced from the cost, the total cost. So this is all what about normal loss. If you guys have any queries, you guys can please post your query. Waiting for your queries now. Very good, Abdul. Good morning. Very good, Hare Krishna Tiwari. Very good, Prachi. Yes, because of normal loss, Shivani, the product cost per unit will be increased. Kavita Chandak, sir, how normal loss is estimated in advance, depending based on the past data and past experiences. Yes, Dhyanesh, normal loss increases the cost per unit of the product. I request you guys to please copy this explanation. It will help you to understand this concept of normal loss in a better way. So if there is no normal loss, the cost per unit will be 18. If there is a normal loss of 1,000 units, then remaining 9,000 units will absorb this cost of 1,80,000. So here my cost per unit will go up by rupees 2. So my total cost will be how much rupees? Sorry, my cost per unit will be rupees 20 per unit. However, if any scrap value is realized, then we will reduce it from 1,80,000 and thereafter we will calculate the cost per unit. Please copy this part, guys. Yes, Pranav Vashist, very good morning. First of all, the normal loss increases the cost per unit of the product, but abnormal loss से cost increase नहीं होगा. Only normal loss will inflate the cost. Dhyanesh Ingle, when talking about whether it is loading, whether it is unloading, whether it is warehousing of potatoes, or whether during the course of manufacturing potato chips, if it is normal in nature, if it is due to the nature of the product, then yes, it will be absorbed by good units. But if it is due to abnormal reasons, I'll be discussing this part after some time. Let me complete normal loss first. What is the difference between normal loss and abnormal loss also I'll be discussing. So don't worry, Dhyanesh. So normal loss can be due to the nature of the product or production process. It can be due to loading, unloading, evaporation, leakage, breakage. It can be due to any of the reasons, depending upon the nature of the product and facts and circumstances of each case. Waiting for your queries, guys. Any doubts, Kavita? So I repeat again, normal loss can be due to leakage, breakage, evaporation, or due to the nature of the product or production process. Yes, in every process, normal loss can happen. Think practically, Jyoti, further. हर प्रोसेस में उसके अलग प्रोस होते हैं, कॉन्स होते हैं. So there are chances that in every process there may be some normal loss also. Any other doubts? Kavita, Shivani, Jyoti, Vinodini, Abdul, Prachi? Okay, so now I'll be discussing one question of the material what I have provided. So I request you to please download the material. I'm discussing example number 2 on normal loss. So let's start with example number 2 on normal loss. Yes, it is different in each and every process, Prachi. So let's start with example number 2 on normal loss. Material is 1000 units at the rate, the input is of 1000 units at the rate 100. So the total cost of material is 1 lakh, labor cost is 1,50,000. Other expenses are 50,000. Scrap value realized on sale of scrap, that is 12,000. The management has estimated well in advance that the normal loss is 10% of the input. You are required to prepare process account and calculate the cost of good units transferred. So let's start, guys. The first question what we discussed in this session was a very basic question wherein we have not wherein no information was given in the question as regards normal loss. Now the second question what we are discussing herein in this question itself, the information is given relating to normal loss. So now how to present the normal loss in books of accounts, let's discuss. So the first column will be units and second column will be amount. So herein the input is 1000 units and the cost is 1 lakh. So we'll write to input or material 1000 units and the cost is 1 lakh. The labor cost is 1,50,000. So to labor 1,50,000. Two other expenses are 50,000. Further, it is given in the question itself that the normal loss is 10% of the input. So on the credit side, by normal loss. Of these 1000 units, 10% is the normal loss, or 100 units is the normal loss. Therefore, my output will be how much? Either it is transferred to the next process or finished goods, whatever it is. So out of this 1000 units, 100 units is my normal loss. So how much will be my output? 900 units. Further, the scrap value realized on the sale of the scrap of 100 units is 12,000. So now we have to calculate this value. Very simple, guys. How much is the cost incurred? 1 lakh plus 1,50,000 plus 50,000. The total cost incurred is 3 lakh. Of this 3 lakh, there is a recovery of 12,000 on sale of scrap. So the total cost incurred is how much? Net cost incurred is 2,88,000. When talking about the calculation of cost per unit, the total cost incurred is 3 lakh. The scrap value realized is 12,000. Whole divided by the input we have made is 1,000 units minus the normal loss. That is cost minus scrap value divided by input minus normal loss in units. So herein we can easily calculate the cost per unit, and this will be rupees 320 per unit. When talking about how normal loss account is prepared, if it is a simple question, units, amount, units, and it is by normal loss. So herein we'll write to process account. How many units? 100 units. Scrap value realized is 12,000. And since the scrap is sold in the market, so by bank, 100 units, 12,000. If you guys have any queries in this part, how to present normal loss account in books, you guys can please ask me. Waiting for your queries, guys. Very good, everyone. Very good, Sri Hari. Very good, Aslam. Very good, Prachi. Very good, Hare Krishna. Very good, Jyoti. Very good, Abdul. I request you guys to please copy the solution in this normal loss account also. Please. Yes, Abdul. This formula is for calculation of cost per unit. Once the cost per unit is calculated, we'll multiply 900 units into 320. So my total cost will be 2,88,000. This entire formula is for the calculation of cost per unit. Pranav, Vashisht, my dear, this only talks about cost. Herein, no profit element is involved. There is no profit element in this process account. So all these figures are cost figures, not the sale figures. I hope Vinodini, your doubt is resolved, your query is resolved. This formula, that is cost minus scrap value whole divided by input minus normal loss in units. We will get the cost per unit. So hopefully, Vinodini, your doubt is resolved. Good, Mr. Aslam. So this is all what about normal loss, guys. We'll assume, Pranav, that this amount realized on sale of scrap is what? The recovery from the cost, the recovery or the saving in cost. So whatever the scrap value that is realized will be deducted from the total cost. So thereby reducing the total cost of the good units. So if no scrap value is realized, simply the total cost divided by good units. If any scrap value is realized, we will reduce it from the total cost and we'll get the reduced cost. That reduced cost divided by good units will be the cost per unit. Now guys, let's proceed further. So now let's start with the next part, that is abnormal loss. Now, meaning of abnormal loss. When the loss exceeds the normal loss, when the total loss exceeds the normal loss, or we can say when the loss exceeds the predetermined loss, then that extra loss is what we call as abnormal loss. I repeat again, when the loss in excess of predetermined loss or normal loss is abnormal loss. This abnormal loss we can avoid if proper care, if we are taking proper care and if we are taking suitable measures, then yes, this abnormal loss can be avoided. This abnormal loss occurs due to carelessness of workers or due to bad plant design or due to abnormal reasons. So what is abnormal loss, guys? When talking about the meaning of abnormal loss, the loss in excess of predetermined loss is abnormal loss. Yes, can it be avoided? Yes, it can be avoided. If suitable measures are taken. Further, it occurs due to bad plant design or carelessness of worker or abnormal reasons. Let me discuss this with the help of an example. Let's say I've made an input of 10,000 units. Now I predicted well in advance that 10% will be my normal loss. 10% will be my. So there will be a normal loss of 1,000 units. So how much output I was expecting? How much output I was expecting? Very simple. My expected output was how much? My expected output was 9,000 units. This was my expected output. I was expecting an output of 9,000 units. However, let's say if my actual output is, let's say my actual output was only 8,600 units. I was expecting an output of 9,000 units. However, my actual output was only 8,600 units. So these 400 units is what? My abnormal loss. So I repeat again, guys, my input was 10,000 units. As predicted by management well in advance, there will be a normal loss of 10% of input, assuming normal loss is 10% of inputs. So 1,000 units, we expected well in advance that there will be a loss of 1,000 units and my expected output will be 9,000 units only. However, when the actual figures were out, my actual output was only 8,600 units. That is less than 9,000 units. So there is a loss of these 400 units over and above normal loss. So these 400 units are what we call as my abnormal loss. So abnormal loss, the loss in excess of predetermined loss. हम लोगों ने लॉस एक्सपेक्ट किया था कि हमारा 1,000 यूनिट्स का ही लॉस होगा, मगर माय एक्चुअल लॉस वाज ऑफ हाउ मेनी यूनिट्स? 1,000 plus 400, 1,400 units का लॉस हुआ. So extra loss over and above predetermined loss is how much? 400 units. So that is my abnormal loss. It can be avoided if suitable measures are taken. Further, it occurs due to bad plant design or due to carelessness of workers or due to abnormal reasons. Let me discuss this with the help of an example. Let's say I do procure these potatoes directly from farmer to manufacture potato chips. Now, during transit, I do expect that certain percentage will be damaged or spoiled. So we call it as normal loss. While unloading, or transit, certain percentage of potatoes are bound to be damaged or scrapped, or there are chances of pilferage. But the point is, let's say during transit, one of my vehicle met an accident. And let's say 50 tons of potatoes were damaged. 50 tons of 50,000 kgs of potatoes were damaged or were scrapped due to this accident. So these 50,000 potatoes, the loss of these 50,000 potatoes is what? My abnormal loss, because it occurs due to abnormal reasons, that is accident. So I hope this part is clear to all. That is what is abnormal loss. So abnormal loss in this examples occurs due to accident. So herein, so this is abnormal loss. Now, when talking about the treatment of abnormal loss, very important, guys. Abnormal loss से प्रोडक्ट का कॉस्ट इन्फ्लेट नहीं होगा, बिकॉज इट इज ड्यू टू abnormal reasons. Abnormal loss रोज रोज नहीं होता है, but yes, normal loss incurs in every business and management has predicted that भाई ये loss हमारा होना ही है. So accordingly we do calculate the cost. But yes, due to abnormal loss, the product cost will not be inflated. So when talking about the treatment of abnormal loss, the value of abnormal loss is the value is equals to the value of good units. What will be the value of abnormal loss? The value of abnormal loss will be equal to the value of good units. Let's say during the course of manufacturing potato chips, मेरी फैक्ट्री में आग लग गई because of let's say burst of boiler. So herein in this case, whatever the loss that is due to this fire is what? My abnormal loss. So the value of abnormal loss will be equal to the value of good units. Further, the abnormal loss will be transferred to costing period. Abnormal loss is shown in the credit side of process account, and thereafter transferred to costing. So ये जो abnormal loss होता है ये credit side of process account में हम लोग show करेंगे and thereafter it will be transferred to costing P&L. Further, there is a query from Abdul sir. What if insurance compensation is received? It will form part of costing P&L. Nothing to do with process account. So what is abnormal loss? It occurs due to carelessness of workers or due to bad plant design, or let's say ड्यूरिंग मैंने अपना प्लांट का डिजाइन ऐसा बनाया कि पोटैटो चिप्स बराबर से निकले बट डैमेज्ड पोटैटो चिप्स निकला. सो हियर इन वी कॉल इट एज abnormal loss. So it occurs due to bad plant design or carelessness of worker or due to abnormal reasons. It can be avoided if suitable measures are taken. It cannot be predicted well in advance, and this loss is in excess of the normal loss. When talking about the treatment of abnormal loss, the value of abnormal loss will be equal to the value of good units. Further, abnormal loss is to be shown in the credit side of process account and further transferred to costing P&L. The product cost will not be inflated. Product cost will not be inflated due to abnormal loss. So हमारा cost per unit calculation करने वाला formula same रहेगा. That is total cost minus scrap value realized on sale of normal loss whole divided by the formula for cost per unit will be same. That is what? My total cost minus scrap value realized on sale of normal loss units whole divided by inputs minus normal loss in units. So my cost per unit formula will remain same whether it is abnormal loss, whether there is abnormal loss or not. I repeat again, the product cost will not be inflated due to abnormal loss. So if you guys have any doubts, queries in this part, you guys can please post your queries. Further, I request you to please write this explanation. Waiting for your queries, giving you 2 minutes time. Any doubts? Jyoti, Shivani, Prachi, Pranav, Abdul, Dhyanesh, Abdul, Sankaran. Waiting for your queries, guys. Any doubts, Vinodini? Yes, Dhyanesh, abnormal loss does not affect the cost per unit. Prachi sir, it means abnormal loss is shown with gross figure. I didn't get you what you are asking, Prachi. Any doubts, Jyoti, Shivani? Yes, Shivani, the cost per unit will not change. I'll be discussing with the help of an example also. So guys, now let's start with the practical question. If abnormal loss is there in the question, yes, it is an abnormal loss, Mohammed Aslam. So guys, let's start with example number 3 on abnormal loss and abnormal gain. I'll be discussing the abnormal loss part only first. So I'm discussing example number 3 of the material what I have provided. A product passes through two process first and process second. Material issued to process first is 5,000 units at the rate 8. Wages paid is 30,000. Manufacturing overheads are 27,000. Loss anticipated was 5% of the inputs. $4,550 units of output were produced and transferred out of process first. Scrap value of rupees 2 per realize scrap value. Scrap has a realizable value of rupees 2 per unit. You are required to prepare process first account, value of normal loss, abnormal loss, and units transferred to the process second. Second part I'll be discussing thereafter. So let's discuss first the question on abnormal loss. What if abnormal loss is given in the question? So let's prepare process account. Herein, the material input is of 5,000 units at the rate 8, so total 40,000. So to material, 5,000 and 40,000. To wages, 30,000. To manufacturing overhead, 27,000. Now, the normal loss is given in the question. That is 5% of the input. That is 250. So herein, guys, my input is 5,000 units. As predicted by the management, that normal loss will be how much? 5% of inputs. So this will be 5,000 into 5%, that will be 250 units. So my expected output will be how much? I was expecting an output of how many units? 4,750 units. However, in this question, my actual output is only 4,550 units. My actual output is how much? 4,550 units. So there is a loss of 200 units, and that is what my abnormal loss. So herein, Normal loss is 250 by abnormal loss is 200 units, and my output that is to be transferred to the next process is 4550. This is all what about adjustment of these 5,000 units. Now here in this question, the scrap value is given, that is rupees 2 per unit. So 250 into 2 rupees 500 is my scrap value of normal loss. Now the question is, what will be the value of abnormal loss and what will be the value of good units that is transferred to the next process? So very simple, guys, as I've already discussed this part in detail, my total cost incurred is how much? 40 plus 30 plus 27. So this will be 4. This will be 97,000. So how much cost I have incurred? 97,000. There is a recovery of rupees 500. So divide minus 500. Whole divided by my total input is how much? 5,000 minus 250. The same approach I am using, that is my expected cost divided by my expected output. When talking about expected cost, very simple, total cost minus scrap value. And when talking about expected output, total input minus normal loss. So here in my cost per unit will be how much? Now, as I told you guys, the value of abnormal loss will be equal to the value of good units. So total abnormal losses of 200 units into 20.31. This will be the value of abnormal loss, and output, the value of output will be how much? 4550 into 20.31. So this will be 4063. This will be 92437. So ultimately what we are doing is we are apportioning the total cost among these two. See, this is my total cost minus this amount. The balance amount, that is what we are getting, is how much? 96,500 is apportioned among these two. This 96,500, that is 97,000 minus 500, the amount we are getting is we are apportioning among these two points. So certain amount will be apportioned, and this amount is apportioned in the ratio of units, that is the abnormal loss units and the normal loss and the output units. So if you guys have any doubts in this part, you guys can please post your queries. I'll be giving you a question, Prachi, don't worry. Very good, Jyoti. Very good, Hare Krishna. Very good, Manisha. Very good, Abdul. So ultimately, The major object is what? To apportion the net cost. How much is the net cost? 96,500. It will be apportioned among abnormal loss and good units in the ratio of units. That is what that is why we calculate cost per unit and we calculate the total cost. Yes, I'll be covering this part also, Aslam. So Prachi Kapoor, hopefully your query is resolved. How to treat abnormal loss? I'll be Dhyanesh. I'll be covering that cost plus profit part also. I'll be discussing one question for the same. Hare Krishna Tiwari, I have just skipped the rounding of figures. That's why there is a difference. Now, guys, let's prepare abnormal loss account. So by abnormal loss, so in abnormal loss, it will be two process account. Now, guys, very important point. There is an abnormal loss of 200 units and the value is 4063. So we will assume that just like normal loss, these abnormal loss units are also sold in the market at the same rate. So here my scrap value is given in the question, that is rupees 2 per unit. So we will assume that similar to normal loss, these units are also sold in the market. That is, these 200 units are sold in the market at the rate rupees 2. So 400 rupees is realized on sale of the scrap of these 200 units. And the balance amount will be transferred to costing P&L that represents the loss to the company. So total 4063 is the value, of which scrap value is realized is 400. So 3663. This is to be transferred to costing P&L. So we will assume that units of abnormal loss are also sold in the market as normal loss units. So I request you guys to please copy this part. If you guys have any doubts in abnormal loss, you guys can please ask me. The reason of discussing all these points separately is that Once we start the full-fledged questions, you guys are thorough with the concepts of how to solve the questions. So if you are thorough with the concepts, that what will be the treatment of abnormal loss, what will be the treatment of abnormal gain, you can easily solve any of the question. So that is the reason why I'm discussing each and every part separately. So waiting for your queries, guys. I request you guys to please copy this part first. No need to write, Abdul, these notes. This is by default an assumption. So no need to write this note. I'm just writing it for your reference कि sir ये 200 units का 400 rupees कहाँ से आया. So that's why I have written that note for your reference, that when you are revising for the exams, you can recollect the concept in a better way. Anyone else having any doubts? Jyoti, Pranav, Dhyanesh, Manisha, Shivani, Prachi, Hare Krishna, Vinodini. Any doubts, guys? So now let's take a break of 10 minutes and then we'll start with how to deal with abnormal gain. If there is abnormal gain, how to deal with it. So let's take a break of 10 minutes. We'll get back after 10 minutes around 9 o'clock or 9:10, 9:05, and then we'll start with the treatment of abnormal gain. Ashok sir, please. Welcome back, guys. So now, if you guys have any queries in this part, you guys can please post your queries. Else we'll move towards the next part of the chapter, that is, what if in a question there is an abnormal gain. So waiting for your queries, guys. Uday Vishwakarma, the concept of job costing is more or less related to cost sheet. Because of the time constraint, I have skipped job costing because contract costing, as far as contract costing is concerned, I want to cover the concepts in detail. And since there was no time, so I skipped job costing. Now, guys, when talking about abnormal gain, what is abnormal gain? Now, when the actual output or actual production exceeds the expected production, that is abnormal gain. What is abnormal gain? I repeat again, guys, when the actual production exceeds the expected production, that is abnormal gain. Let's say I have made an input of 10,000 units. I was expecting a normal loss of 10%. Therefore, my expected output was how much? I was expecting an output of 9,000 units. Now, let's say when the actual results are out, my actual output comes to 9,200 units, much more than what we expected. So these 200 units is what? My abnormal gain. This 200 units is what? My abnormal gain. Now, abnormal gain can be due to wrong estimation of normal loss also, or it can be due to, let's say, efficiency of my workers plus improvement in technology that is used in production. So what is abnormal gain, guys? When the actual production exceeds the expected production, then it is abnormal gain. When talking about expected production, very simple, guys, inputs minus normal loss. It occurs due to wrong estimation of normal loss or due to efficiency of workers or it may be due to improvement in production process. Now, when talking about the treatment of abnormal gain, again, the value of abnormal gain will be equal to the value of good units. The value of abnormal gain will be equal to the value of good units. Further, abnormal gain is shown in debit side of process account and thereafter transferred to costing P&L. Abnormal gain is shown in debit side of process account and thereafter transferred to costing P&L. We can use one more word for abnormal gain, that is saving in normal loss. Alternatively, we can say that is what is abnormal gain? Saving in normal loss. How come? I'll be discussing this with the help of an example. So if you guys have any queries till now, you guys can please post. In the meanwhile, I request you guys to please copy this explanation. Thereafter, we'll discuss one practical question on abnormal gain. Very good, Shiva, Shankari. Yes, the cost per unit will be same whether it is abnormal gain or whether it is abnormal loss. The cost per unit is always calculated on expected output. So let's start with the same question, wherein what if in case if the output is 4,850 units. So let's start with the same example. The input of material is 5,000 units. So total will be 40,000. Wages is 30,000 and manufacturing overhead are 27,000. So 2 wages and 2 manufacturing overheads. Further, it is given in the question that normal loss is 5% of input So that is 250 units. And the scrap value realized is rupees 500. Herein my output that is transferred to the next process is 4850. So herein I was expecting an output of 5000 minus 250, that is 4750 unit. However, my actual output is more than my expected output. My actual output is 4850 units. That is 100 units more than what I expected. So these 100 units are what? My abnormal. Now we have to calculate the value of this abnormal gain and the value of units that are transferred to the next process. Again, the concept, the way of calculating the cost per unit will be the same. That is, total cost, that is 97,000 minus scrap value realized, that is 500, whole divided by the expected output, that is 5,000 minus 250. So my cost per unit will be same. That is 96,500 divided by 4750. That is 20.31. So the value of output transferred to the next process is 4850 units into 20.31. So this will be 98,532. So this will be 2032. That is so this is how the abnormal gain will be presented in process account. If you guys have any doubts in this part, you guys can please post your queries. Now, very important part, guys. Very important part, guys. Do make a note of it. I'm discussing normal loss account and abnormal gain account. So, herein when talking about my normal loss to process account, $250 units at the rate 500. And talking about abnormal gain account by process account, that is 100 units and the value is 2032. Now, very important, guys, we have estimated that there will be a normal loss of 250 units. We have estimated or predicted that there will be a normal loss of 250 units. However, there is an abnormal gain of 100 units. It means how much units actually we sold in the market. The units that are actually sold in the market is how much? Only 150 units. I repeat again, see, we have predicted well in advance that there will be a normal loss of 250 units. However, our actual output was more than expected output by 100 units. So it means what? There is a saving in normal loss of 100 units. There is a saving in normal loss of 100 units. We call it as, we can say that it is an abnormal gain of 100 units, or we can say there is a saving in normal loss of 100 units. So these 100 units will be adjusted against abnormal gain, and the balance number of units that are sold is only 150 units at the rate rupees 2 per unit. So the units that are sold actually are only 150 units. The balance will be adjusted against abnormal gain, that is of 100 units. So we can alternatively say that what is abnormal gain? Saving in normal loss. So while preparing abnormal gain, 100 units are anyways adjusted against normal loss, and the balance amount will be transferred to costing P&L, that is 1832. So I repeat again, what is abnormal gain? The saving in normal loss also. So when talking about, there was a normal loss of 250 units as expected. However, there is an abnormal gain of 100 units. So the actual units that are sold in the market is only 150 units. So 150 units are sold in the market at the rate rupees 2 per unit. So total amount is 300. Balance will be adjusted against abnormal gain. That is 100 units at the rate 2 rupees per unit, 200. So while preparing abnormal gain account, we have to prepare first the normal loss account. Then only we can prepare the abnormal gain account. So if you guys have any doubts in this part, you guys can please post your queries. We are done with abnormal gain also. This is the rounding of difference. Ms. Bala Vinodini, sir, can you please tell us which chapter is the most important, which we have to give priority in practice for examination point of view? I've already discussed before in the first session of material costing. So you can refer this chapter, you can refer the lecture of material costing with Vinodini. So guys, this is a bit on the trickier side. That is normal loss account and abnormal gain account when there is abnormal gain given in the question. So if you guys have any doubts in this part, you guys can please ask me. Can you please, Uday, can you please be clear what exactly you are asking? I'm not getting what you're saying. If you're saying that if no scrap value is realized, if in this case, if no scrap value is realized, then entire 2032 is to be transferred to costing P&L. Many students find difficulty in this part, that is when if abnormal gain is there in the question, how to prepare normal loss and abnormal gain account. So guys, please do make a note of it. Further, if you have any query, you guys can please. I'll be giving you a question in the next session. It's already 9:28 now, Abdul. I request you guys to please copy these two accounts, that is normal loss account and abnormal gain account. Any doubts, Jyoti, Shivani, Abdul, Pranav? Okay, Kavita, again, abnormal account, gain account, explain please again. So guys, when talking about abnormal gain account, when abnormal gain is there in the question, we have to first prepare normal loss account. So when talking about normal loss account, 2 process account, 250 into 2, 500. When talking about the actual units that are sold in the market, it is only 150 unit because there is an abnormal gain of 100 units. It means the actual scrap is how much of 150 units that can be sold in the market at the rate rupees 2 per unit. So this is how we got 300. So the balance number of units will be adjusted against abnormal gain. So here in our abnormal gain is of 100 units and the value is 2032. 100 units are adjusted against normal loss and the balance amount is to be transferred to costing P&L. Sir, if there is no abnormal gain, then the treatment of normal loss, if nothing is realized, no need to prepare normal loss account. If any scrap value is realized, I have discussed in the first question itself, if normal loss is there and scrap value is realized, then in normal loss account, 2 process account and buy bank account, that's it. If there is no scrap value realized, then no need to prepare normal loss account. I hope your query is resolved, Kavita. Giving you last 2 minutes, whatever the queries you have relating to the concepts, what I have discussed, that is how to prepare process account, how to prepare normal, what if in case if there is a normal loss, how to deal with normal loss, if there is an abnormal loss, how to deal with abnormal loss, and then last, abnormal gain. So if you guys have any conceptual queries in this part, you guys can please post. In the next session, we'll be starting with a full-fledged question. But before starting the question, I want you guys to be thorough with what all treatments are possible for all these points, that is normal loss, or abnormal gain. Uday Vishwakarma, when talking about the amount to be transferred to costing P&L, it happens only in case of abnormal gain and abnormal loss. If it is normal loss, nothing is to be transferred to costing P&L. So guys, done with today's session. Try to revise what I have discussed in this class. In the next session, we'll start with the full-fledged question. And apart from this, we'll be discussing few more points relating to the concept of equivalent number of units. And what if the units are transferred to the next process at cost plus profit. But guys, the key is the part what I have discussed in this session. So before attending the next class, I want you guys to please revise what I have discussed till now. So till then, enjoy your weekend. It's Saturday, Sunday. So please take care of yourself. God bless you. See you soon in the next class on Monday. Thank you so much, guys. Ashok sir, I'm done.